Good morning, everyone. Today is Wednesday, March 16th. I'm Marv Eisen, the Timeless Dollar. Starting out the day, as we do every day, as you should do every day, is to look at the economic calendar to see if there are going to be any announcements that are going to be market-moving announcements. And today there certainly is at 2 p.m. right here, FOMC announcement. And if you don't know what the FOMC is, you're not going to understand the rest of what I'm going to say. So at 2 p.m. the FOMC announcement, and people think that the Fed is going to raise interest rates by 1/4 point. How does this make sense? Gas prices are almost double what they were a year ago. Food prices are out of sight. The price of everything else is out of sight. And so the Fed is raising rates to make things more expensive. Do you understand this? I don't. But then again, I'm not an economist. I'm a trader. So let's move on to the morning news. Now, the morning news is everything is in the green, and that's very good. We had a great day yesterday for the bulls, that is. And if you're a trader, it doesn't matter. Bulls, bears, the market goes up, the market goes down. And to take advantage of that, we have to know how to trade. The market is, now this is just before, it's about a half hour before the market opened, 20 minutes before the market opened. This is the E-mini. And the market is trading up here at 4,300. The close yesterday was at 42.62. So the market is, if it continues this trajectory, the market is setting up for a gap trade. Now, will it close the gap? Very possibly today. It didn't yesterday, very possibly today. The rest of the day, it's just going to bounce around up and down, and nothing much is going to happen until 2 p.m. Now, at 2 p.m., my advice is to take risk off. In other words, don't have any trades on, because FOMC announcements tend to make for very volatile market action, price action. Prices can go up 75, 80 points or more and down in a very short period of time. And so while it's attractive to say, gee, I can hop on, make 80 points, maybe 100 points, and get out and make a lot of money in a very short period of time. Yes, but you can lose a lot of money in a very short period of time. My method of trading, and this should be yours, is to look to trade with as little risk as possible. That means I want to know where the market is going before it gets there, or before it even goes there. So how do you do that? Well, I already told you one thing. The market is trading up here, and it closed yesterday at 42.62. So there's a possible 38-point gap that, if it closes, very attractive trade, low risk trade, because gap trades close very often. So that's an opportunity for the early bird traders. But what else do you know? Nothing right now, except at 2 p.m. there's going to be a lot of volatility. My advice again, unless you like to give your money a roller coaster ride, stay out of the market just before and just after 2 p.m. Wait till things settle down. So let's go back to trading for a living. You'd like to trade for a living. I'm assuming many of you like to trade for a living, and you may maybe pick up a few bucks, but either way, you've got to be able to reduce risk to an absolute minimum. Now, this is how I practice trading, and let me give you a little insight. I'm going to go back to yesterday. Here's yesterday, March 15th. Now, yesterday, March 15th, was a very good day for the bulls. But at the market open right here, the market open here at, let's see, market open right here at 4,200. And what did I know yesterday that is similar to what I just described? Well, I know that the market was setting up for a gap trade. Ultimately, it did not fill that gap. Look, the market opened, went up. There are 10 points between these horizontal lines. The market went up about 15 points at the open, and this is a 3-minute chart. And then within 12 minutes, went down to 41.88, but never did close the gap at 41.73. But the way I trade, I also look at the stochastics. And when the market is trading and it's sort of oversold, I don't want to be trading down, or I'm very careful. And I know that this gap trade, while I like this trade, it has potential to reverse on you, which it did. So that's a potential problem because, of course, we don't know where the market is going. So that leads me to a second thing. Where is the market going? That's the most important, the most critical information you can know as a trader. Where is the market going? Because if you know where the market is going, you know what 99.9% of other traders don't know. So how do you know where the market is going? Well, a crystal ball is nice, rock, paper, scissors, eeny, meeny, miny, moe. These are all ways to take a guess at where the market is going, but there's a better way. And I use what's called a trading zone. And when I calculate a trading zone, I do it in order to measure the breadth of the market and determine where the market is likely to go on any particular day. Now, how do I do that? I calculate a trading zone for the day, and I do this every day, and I did it for yesterday. I've done it today, but let me show you yesterday's trading zone, and it's right here. And this is how my chart looked at the beginning of the day. If you block out everything from the open to the right, this is what my trading zone looked like. So my trading zone told me that the support is down here at 41.47, and the resistance is up here at 42.36. But the market didn't comply with that, did it? Yes, it did, because the market also told me something else. That the market is going to traverse 84 points from low to the high. So that means if I can find the low or the high and add or subtract 84 points, I should know where the market is going to trade in terms of where the opposite end of the day is going to be. So if I add 84 points to the low, now where was the low? The low was down here at 41.87. 41.87. And if I add 84 points to it, now the width of my trading zone is 84 points, the height rather, 84 points. So let me move my trading zone to match the low of the day. I'm going to take my trading zone and I'm going to move it up to the low of the day. I'm going to move it up right here, right to the low, match 41.87. Okay, 41.87. And there I am. And so from the low of the day to the high, just about 84 points. Voila. So this is what I know as a trader, and this is what you know, and this is the basic. This is a basic. Because where was the trade within this trading zone? Well, if you want to take my course, I'll show you where the likely trades were, and I'll show you where the most low-risk trade was. There are things that you need to know if you're going to trade for a living. And remember, you have to be very risk-averse if you're going to have many winners to few losers. So that's my video for the day. Trade safely. Remember, FOMC day. And keep your powder dry. Likely gap closing today. Don't look for much action up until the FOMC announcement. Market expects a quarter point rise. Doesn't make any sense to me. Maybe the Fed will leave interest rates alone. I mean, why make things even more expensive? At any rate, thanks for watching, and I'll see you in my next video. Marv Eisen for Timeless Dollar.